Hi friends, good day. Welcome back to my YouTube channel, and for today's video, we're going to discuss about the different kinds of stock or equity mutual funds available in the market, and we are also going to classify which equity mutual fund best suits you in terms of your financial objectives and investing personality. Now let's recall what are stock mutual funds. Stock mutual funds are investments from the pooled money of the investors managed by a fund management team, which are primarily invested in the shares or stocks of the companies. Investing in the stock mutual funds are usually for the long term, like 5 years or more, in order to capture the growth of the business or the company and accumulate earnings from the dividends of those companies the mutual fund is invested in. In the previous video about mutual funds, which I will link up here, I discussed to you three variations of the equity mutual funds, which are the equity income fund, the equity index fund, and the growth equity fund. Each one of them has different objectives. That is why it's very important to understand what kind of equity mutual fund you want to invest in so that we can align it with your investing objectives. Now let's discuss each one of them. The equity index fund is a stock mutual fund which is mirroring a particular index, such as the Philippine Stock Exchange Index, which is an index wherein it is comprised with the top 30 biggest and most liquid stocks in the Philippine stock market. So these are the likes of SM, Ayala Corporation, SM Prime, Ayala Land, the banks, the BDO, Metrobank, BPI, and the other conglomerates, and even power companies such as Meralco, Semirara Mining Corporation, and the other stock index, which you can actually check from the website, the Philippine Stock Exchange Index. And the equity index fund basically tracks the performance of the PSEI. And this is not just limited in PSEI. There are actually equity index funds in the market that track other indices such as the MSCI or the other indices abroad. And the equity index fund is actually good for people or investors who want to ride the momentum of the economy, because usually when the economy is going up, the index of the particular country actually goes up as well. So if you want to ride the momentum of the Philippine economy, you might want to invest in the equity index fund. The second one is the equity income fund. So the equity income fund is a stock mutual fund which is primarily invested in stocks that pay out high dividends. So if you recall, dividends are a form of profit sharing in the company. When the company is earning well, they can distribute part of their earnings back to the shareholders or to the investors, and you get income from it. And investing in equity income fund, basically you are investing in those kind of companies that share profits to the investors through the form of dividends. So these are usually companies like the telcos, PLDT, Globe, and the utility companies, the power companies such as Meralco, DMC, Semirara. And these are companies that pay out large amounts of dividends compared to the other stocks in the Philippine market. That's why investing in the equity income fund is good for investors who want to be protected somehow in terms of volatility, because these are stocks that gives you a stable or relatively regular amounts of dividends. So if the market is going down, at least you are confident enough that you are getting income from the dividend side. That's why equity income fund is good for those investors who are looking to generate dividends or income or cash flow. And the third type of equity fund is a growth equity fund. So this kind of fund is primarily invested in the stock which has a growth potential or has a large amount of pipeline projects, because these are companies that are potentially going to generate large income over the long run. And these are companies that are actually second liner or mid-cap companies. They are usually not part of the index, but they have the potential to be added in the index because of their growing earnings. So if you are the kind of investor who wants to invest in companies that are starting up right now, but eventually they will grow big over time, and you believe in their story of growing, then this is kind of beneficial to you, because there is a high growth potential for these kind of companies. And these companies are actually very difficult to identify. That's why the fund manager actually helps you become knowledgeable which kind of stocks you should invest in if you want to invest in the growth stories of the companies. So yeah, that's the advantage of getting a mutual fund and having a mutual fund that is invested in a growth equity fund. And those are the three variations in the mutual fund space, in the equity mutual fund space in the particular. So those are the equity index fund, the equity income fund, and the growth equity fund. And yeah, guys, I hope you got some tips and ideas on that one. Thank you for listening up to this point in the video. And I hope you guys can comment down your greatest takeaway or learnings from watching this video. Share this to your friends and your loved ones. And watch my other videos in this channel so you can learn more about productivity hacks, investment options, and finance tips. And see you guys in the next videos. Have a great day ahead. Bye-bye.